Welcome, guys, to another episode of Parvez Trade. And today, on this episode, I thought I'll talk about one of the most, I think at least it's going to be one of the most important topics in the next year. That is the commercial real estate market and what the future looks like there. And so, first of all, for those of you who don't know, ever since COVID hit, most of the companies st started working from home. They reduced their commercial office space, and commercial real estate has been going through a downturn even before COVID due to adoption of online stores, online methods of communication and business running. And so commercial real estate markets have been on a decline in value even before COVID. COVID was just one of the final nail in the coffin. And so I believe there will be a big crash coming in the commercial real estate market next year. And yeah, I just want to give you guys some details of what it might look like if you're positioned in the market, what you can do to protect yourself against it. Okay, so first let's get the basics out of the way. So we're talking about the Western world where this e-retail store, online retail store adoption is much more in use, and where this, you know, working from home became more prevalent ever since COVID. And so commercial real estate markets took a big hit in the Western world more than they did in the rest of the world. The reason I believe next year will be critical for this market is because next year, I think close to $1.5 trillion worth of commercial real estate mortgage will be up for refinancing, will be up for maturity. So next year is a big deal for the commercial real estate market in USA mainly. And so yeah, $1.5 trillion, that's a big market of uh, mortgage bonds that are gonna come mature, that are gonna be up for refinance. And most of these, projects are bankrupt. They have lost their value ever since their inception. Interest rates are too high, so if they want to refinance the project, they'll have to do it at high value, higher interest rates. And so you're talking about higher interest rates on $1.5 trillion worth of projects that have lost value, and most of these projects will basically go bust. And so, who will be impacted first? Okay, let's talk about the impact, the fallout from this crash next year. And so, first of all, you have local banks and regional banks who are the main lenders to commercial real estate market in North America and Europe. And they're the ones that are going to go bust first. And so, what will be the end result? Okay, let's just fast forward. $1.5 trillion is up for refinancing next year. And most of let's assume almost correctly that because the interest rates are high, because these projects have lost value, most of the refinancing will not happen. Most of the projects will go bust. And so most of these lenders of small banks and regional banks will have to write off a significant amount of the credit they gave out. And so what happens in that situation? Well, I mean, the small banks will go bust and they'll be bought up by the big banks. And I don't think federal government will intervene to save small banks because they're not individually going to have a ripple effect on the economy because they're small. Big banks will look at this as an opportunity to move into the this new market of the small banks and the regional banks. And yeah, what does it look like for the other real estate market? I mean, look, the collapse of real estate will, for at the very least, drop the real estate prices in the other markets. And like, I mean, I know USA went through a real estate boom and bust cycle in 2008. So people think that it will not happen again. And I want people, like, for example, I read this recent report where the sales, um, like most of the real estate agents in USA, have sold no property in the last 1 year. So a majority amount of real estate agents have sold virtually no properties, new properties in the last 1 year. And so you have a country like USA that's going through this phase, and then if the commercial real estate bubble pop, it will have a ripple effect because these buildings are not going to just disappear when the underlying mortgage goes bankrupt and underlying projects go bust. The building is still there, the structure is still there. So they'll likely be, refurbished and to residential housing. And then when you flood the market with all this new residential housing at such a short pace because the infrastructure is all there, you just have to do some renovation inside, and boom, you have a renovated office space, which is now an apartment building to be sold. When you flood the market with all these new condos, you're going to crash the condo market. And the condo market has been on a decline as well, because especially in Canada, Canada's condo market is in serious trouble. And so when this commercial real estate market goes bust and you're even flooding the market with even more new condos and apartments, then the existing condo market will go bust in Canada. And like Canada's housing bubble, it's gonna pop. It's gonna pop soon. And no, I know it's been rallying. The Canada barely escaped the housing crash of 2008, but I think this one, it'll be hard for Canada to escape just because they're already going through a serious decline in their condo market, and a lot of condo projects are going bust in Canada recently. And this commercial real estate bubble that will pop next year, I think, will just be the final nail in the coffin for commercial markets and for condo markets in Canada. So what does that mean for you as, let's say you're just an average guy, you have a house, you have an apartment you bought on a mortgage. Well, when significant part of the real estate market loses significant amount of value due to a bubble pop, it drags the entire real estate market down because of the dynamics we just mentioned. Because the infrastructure is there, it just gets converted into renovated cheap supply of residential housing. And so all the existing residential housing, whether it's condos or just normal townhouse and other houses, they'll lose their value and their equity. And you'll see overnight that a lot of, especially in Canada, where people bought up these houses in the last few years at such high prices, what you'll see is basically that overnight, once this commercial real estate bubble pops, you'll see all these houses and all these households, families, overnight going into negative equity. And negative equity basically means, let's say you paid $400,000 for a house. But now, because of this housing market crash, now the house is worth $200,000. But you still have a 30-year mortgage on this $400,000 house that you bought. So you're still obligated to pay $400,000 plus interest back to the bank. But the actual value of the house right now is 200 grand. Okay. So if you want to sell the house right now, let's say you don't have a job or you can't keep up with the high interest rate mortgage payments, what do? Okay. You bought the house at $400,000. You took a loan from the bank. Now the interest rates are high. You can't keep up with the pace of payment, increasing payments. And all of a sudden, there's a crash in another part of the real estate market, the commercial real estate market. Your house value has gone down. Now, if you want to sell it on the market, it's, let's say, $200,000. You still have $200,000 remaining to pay the bank. So will you sell the house? Or will you keep paying the bank and hoping the housing price goes up in the future? And hoping the interest rates come down and don't keep rising? But you're doing a lot of hoping there. Your hopes are doing a lot of heavy lifting because interest rates are not coming down anytime soon. Okay. For those of you who bought a house on a variable interest rate, which most of you did, and the interest rates are not coming down anytime soon. They're going to keep rising. The currency is going to devalue rapidly in the next few decades. And so you're stuck in this bind. If I keep the house, if I keep the mortgage, I have to spend more money in mortgage payments, okay, which is great. And if I decide to sell the house, because I'm in net negative equity, I have to pay the bank the balance of the negative equity, and I don't have the money to pay. So do I just wait it out? Hopefully, hope for the housing market to pick up pace again in the future in a high interest rate environment, which is unlikely to do, which the housing market is unlikely to pick up pace in price in a high environment, high inflation environment, high interest rate environment. And if you're smart, you have already sold your house. You've already moved to a rental property, or and you've already kept money in bonds in cash, and you're waiting for the crash to buy up a cheap property, so you're not in negative equity, and so you can negotiate a good interest rate, fixed interest rate, hopefully. And look, when you buy a house, and this is for most people in the Western world, whether in Canada, America, most of your talking you do is with your real estate agent. And I think what most, not most, I would say many people don't understand is your real estate agent is not a financial advisor. His or her only job is to sell that house or sell that property at as high a price as possible so he can maximize his commission. He's not there to help you get a good interest rate on your loan or to advise you on when to buy or sell this property. He just wants the commission. And yeah, I think I just want to talk about this topic and just what I hope people realize this commercial real estate market crash is coming next year. And yeah, I want you to prepare for it. How will the markets react? I mean, obviously, it, so then you come down to what does the central banks do, right? I mean, they cannot drop the interest rates anytime soon because the currency, like we talked about this in previous videos, the currency has been devalued, especially after COVID, especially after giving out all this free money. The currency has been devalued to such a point that any significant drop in interest rates in the near term will spike up inflation. Mark my words. There's no ifs and buts. Okay. If the commercial real estate market crash and with that, they pop any housing bubbles that are out there in other real estate markets, the central banks cannot do another QE, quantitative easing, anytime soon to solve this problem like they did in 2008 because doing that means dropping the interest rate, and dropping the interest rate means bringing up inflation. Now, I know people said they can do targeted QE, so they can make sure that the new money they create only gets used to buy up these distressed bonds, mortgage bonds. But people said that's what the banks would do in 2008 and that everything would be fine. But if you look at the inequality, the wealth gap in Western countries, it grew rapidly after 2008. That was not a coincidence either, because when you do this kind of QE and you flood the market with this new currency, even if it's targeted to just the mortgage bonds, it eventually trickles down, and it might not cause inflation on the ground like you saw after COVID, but it will destroy the middle class, and it will accelerate the wealth gap. And the reason being, you are basically making housing less affordable anytime soon. So, like, uh, every economic financial markets go through a boom and bust cycle. Okay, the prices rise too much, whether it's the stock market or any other markets, they go through a boom and bust cycle. The prices rise too much, and then they correct, and then they rise again. The thing that happened in the mortgage market, housing market in USA in 2008 is the prices went up, but people went bankrupt because they didn't have the financial help to pay those mortgages. And then the US government stepped in and bought up those distressed mortgage bonds and thus kept the housing prices up. So what happened? You have a bunch of people going bankrupt financially because they can't afford their mortgage payments. Okay. And their wealth decreased. And in a natural system, the housing prices would also decrease because the bubble popped. But because this decrease will have a tsunami effect on the rest of the financial system because of all this credit default swaps and all the other garbage that the US banking industry did basically. In order to stop this spreading of this ripple effect, the US government came in, bought up these mortgage bonds, kept the housing prices up. So you have people in the middle class getting poorer overnight because they're bankrupt now, because they can't pay their mortgage payments. And but the housing prices stayed up because the US government flooded the housing market with new money. So the wealth gap increased after 2008. So if the US government does that same thing this time, you might not see an increase in your eggs and milk, but you'll see a rapid decline in your living standards, and you'll see a faster increase in the inequality wealth gap. And yeah, I think this is going to be a big trouble. I don't know how Trump will handle this. And I know what Trudeau will do. I know he'll just flood the market with new money. And whether Trump will try to do the same, he might. Look, you have to understand these Western leaders, whether they're liberals or conservatives, they don't care about the growing wealth inequality, which is destroying the middle class. Whether that's by inflating the prices of your grocery or keeping house prices elevated at inflated price by flooding the market with new money. And so when this commercial real estate market pops, the bubble pops next year, which I'm sure it will, the most likely scenario is these governments will basically try to kick the can down the road, flood the mortgage markets with new money, and even accelerate, and as a result, accelerate the already increasing inequality in the society. And yeah, I will keep an eye on this, but yeah, I just want to talk about that, and yeah, we'll talk about this again in future video in 2025. But yeah, my prediction is the commercial real estate market will crash next year because all this refinancing will definitely not happen with interest rates so high. And that will have a ripple effect on other markets in the real estate industry. And that will have a ripple effect on the equity value of your home as a homeowner on a mortgage. And yeah, you don't want to be left holding, uh, you don't want to be left with a bad taste in your mouth. You want to act as soon as possible and make sure you're not left as a house owner in a situation where you can't pay the increasing mortgage payments, but you can't sell the house either because the house prices are down, and your only hope is the house prices pick up as a result of government intervention. But even if government intervenes, they'll have to drop interest rates to do that. And can they do it in a targeted manner that will not pick up inflation in the other sectors? I mean, inflation in the groceries and other daily essentials wasn't a big deal in 2008. It is a big deal right now. There's just a good mix of different crises coming all together. And yeah, we'll see how Trump handles this. He will have very little sway over the matter because it will be a matter to be decided by the Federal Reserve. And yeah, I'll keep an eye on this. I don't think they can drop the interest rates further without causing runaway inflation, even if they try to make it targeted, QE in the mortgage markets. Bye bye. So, uh, if the federal balance sheet, the USA federal balance sheet expanded rapidly after 2008 because before 2008, the US Federal Reserve was never ever in its history in the business of buying up distressed mortgage bonds. In 2008, that was the first time the US Federal Reserve got into the business of buying up these distressed mortgage bonds and thus increased their balance sheet rapidly. And they're now trying to reduce the balance sheet because that's the most effective way to handle inflation in all sectors. So will they now go about another, spending spree, another printing spree, and increase the balance sheet again in the next year? I don't think they can. I think they'll just have to tell the real estate markets, the mortgage owners, the average middle class families to, yeah, declare bankruptcy, sell your house, or keep paying the increase in mortgage payments. And the bankrupted real estate market will basically be bought up by the big corporates that are holding cash right now. And they'll convert it into condos and whatnot. And yeah, so cash is king, but I just don't think that USA Federal Reserve or other Western central banks are in the position to increase their balance sheet by helping this soon to pop commercial real estate market bubble. What will that mean for the other countries around the world? I mean, if the Western countries' real estate market crash as it happened in 2008, other markets around the world saw a ripple effect. And this is very interesting. I want to talk about this as well before I end this video, which is that the BRICS nation, the BRICS idea of the BRICS actually came into being after the 2008 financial crash. So after the 2008 financial crash, the Eastern world, the global South, realized that these Western countries are so greedy and their traders and bankers are so greedy, they destroyed the entire economy by just pumping up the real estate market. And then they just flooded the market with new money instead of penalizing the wrongful traders and investors. And who was left? And the ripple effect when was felt in the Eastern markets in the global South because the Western markets, at least back then, they had a strong middle class. And so they had a strong consumer base that was buying from the Eastern markets, Eastern world markets, and the South markets, global South markets. And so the moment this Western middle class got broke overnight as a result of this bubble pop in 2008, they didn't want to buy as much goods from the Eastern world and the global South. And so all of a sudden, the global South and the the Eastern world are going through a recession for a problem they had no control over. And they're having all these ripple effects in the financial forex markets, right? Because Western worlds, US has the reserve currency. They can manipulate and get ahead in the forex markets, even after doing QE, quantitative easing. And the BRICS idea actually came into being after the 2008 financial crisis. Brazil, Russia, India, China, South Africa actually got together at a summit. I think it was 2010. And they realized, look, if there is another real estate market crash in the Western world, we don't want to be left holding the bags for a problem we had nothing to do with. We want to be control over our money. Want to have control over our destiny. And that's how the BRICS alternative financial system idea came about. And so when the commercial real estate market crashes next year, I think that'll just accelerate other countries adopting the BRICS financial system. Okay, that's another. If you're trying to, how will that impact the US dollar? Well, I mean, it'll go down, right? That's what's supposed to happen. But I mean, look, the long plays US dollar is short. If you short the US dollar in the long run, you'll make money. But obviously, how long you have to short it for is the big question, right? And if you're shorting a currency, you need margin in your account with high interest rates. You need higher margins and all that. But yeah, I'll keep an eye on this, and it's going to be interesting. It will definitely have ripple effects around the rest of the world, and especially you have countries in the Middle East, right? Cities like Dubai, Saudi Arabia, they're also joining BRICS. They, but you have to understand places like Dubai, and especially Doha, Riyadh, most of the financial system, the real estate market is still uh, highly correlated with the Western real estate markets. Okay, so these big cities in the Middle East, their real estate market prices are still highly correlated with the Western real estate markets. I don't know why, but that's just how it is. You can talk about why that is, but the data basically shows they're still highly correlated. And so when the 2008 market pop happened, Dubai went through a real estate market pop, a big one. Okay, they almost went bankrupt in 2008. So there's high level of correlation between the Western real estate markets and the Middle Eastern real estate markets. If you're someone who's trying to buy a house or a property in the Middle East, right? I mean, yeah, sure, wait another year. Big things are happening next year. Yeah, I'll keep an eye out. If you guys have any comments on this, please feel free to share. And yeah, that's it from me from today. And yeah, I'll see you guys in the next video.